You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday. Happy Valentine's Day. 14th day of February 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. So that's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael comes on in a bit, he'll walk you through step by step. We'll get your indicators up and running today. Monday's a holiday, so we won't be here Monday. You'll still get 5 consecutive trading days on the trial, and you'll have some bonus days over the weekend to kind of get familiar with the indicators and be ready to hit the ground running Tuesday morning. When the live training room ends each day, at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for the afternoon broadcast. This broadcast, which is, unlike the morning broadcast, open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link. Fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit is you'll be able to access the question box, so you can ask questions and participate in the discussion. Now, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You already got the YouTube part memorized, so really all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. This is our afternoon schedule each and every day. Now, those of you that tune in via YouTube, you may have noticed the last couple days that we've lost our YouTube connection. We stream fine on the GoTo platform, but for some reason, we've been dropping our connection with YouTube. So I'm going to take a second to try to fix that issue. So just stand by, and I'll be right back. Okay, I don't know if that fixed it or not. We'll see. Well, let's dive into our daily devotional. Here's our schedule every afternoon. The topic of the devotion we're in right now is overcoming fear, worry, and anxiety. Something we all probably know a little bit about. Today's scripture is Matthew 6, verses 25 through 33. And I'm going to share it from the Message translation. If you decide for God, living a life of God worship, it follows that you don't fuss about what's on the table at meal times or whether the clothes in your closet are in fashion. There's far more to your life than the food you put in your stomach, more to your outer appearance than the clothes you hang on your body. Look at the birds, free and unfettered, not tied down to a job description, careless in the care of God. And you count far more to him than birds. Has anyone, by fussing in front of the mirror, ever gotten taller by so much as an inch? All this time and money wasted on fashion. Do you think it makes that much difference? Instead of looking at the fashions, walk out in the fields. Look at the wildflowers. They never primp or shop, but you have seen color and design nothing like it. The 10 best dressed men and women in the country look shabby alongside them. If God gives such attention to the appearance of wildflowers, most of which are never even seen, don't you think he'll attend to you, take pride in you, do his best for you? What I'm trying to do here is to get you to relax, to not be so preoccupied with getting so you can respond to God's giving. People who don't know God and the way he works fuss over these things. But you know both God and how he works. Steep your life in God reality, God initiative, God provisions. Don't worry about missing out. You'll find all your everyday human concerns will be met. So, our topic today is simply, therefore, do not worry. That's a big statement. Jesus really got down to brass tacks when he said, if God so clothes the grass of the field, which is alive today and tomorrow is thrown into the furnace, will he not more clothe you, you of little faith? Little faith. Think about these words. The Lord equates our worry with a lack of faith. Why does the Lord say that worry is unbelief? How does my worry reflect the level of my faith? My worryometer is also a faithometer. In this case, it isn't my faith that's redlining, it's my unbelief. Why is worry unbelief? Because it has roots in doubt about God's character. It questions his fatherly care and provision. When we worry about what's going to happen to our lives, what we're really saying is, God, you can't handle this. You're either too weak, uninterested, unloving, or not smart enough to take care of my life. I've got to devote all my attention to sorting this situation out on my own. Rather than spending my days pursuing my own desires and worrying about my future, we need to be actively focusing our energies on God's kingdom and his righteousness. In Matthew 6:33, that's where Jesus said, seek first his kingdom and his righteousness, and all these things will be added to you. Let's pray. Heavenly Father, thank you for reminding us not to worry, but to trust in your faithful provision. Just as you care for the birds of the air and the flowers of the field, you will surely take care of us. Help us to seek first your kingdom and righteousness, knowing that all we need will be provided. Fill our hearts with peace and confidence in your love, and teach us to rely on you in every season of life. It's in Jesus' name we believe and pray, and everybody said, amen. Amen. Happy Friday. Everybody's been working for the weekend, and here it is. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 112 points, the NASDAQ up 6, S&P 500 down 3.5, the Russell 2000 down almost 3. Pretty quiet. In the commodity basket, crude oil down 39 cents, trading $70.90 last. Gold down $36.60, trading $29.0920 last. That's a drop of 1.25%. Silver up 13 cents, make that 14, trading $32.87 last. In the Asian markets at the close, the Nikkei dropped 312 points. The Shanghai rose 14. The Hang Seng gained 805 points. That's 3.75%. And in the European markets at the close, FTSE down 32, DAX down 98, the CAC up 14. That gave us a mixed day in Asia, a mixed day for the UK, and it is now a red Radio Friday here in the US of A. Let's take a quick look at the news. I know we're running behind schedule. Some of you are old enough to remember when Saturday Night Live was actually funny, aren't you? Well, Saturday Night Live will celebrate its 50th anniversary Sunday, 8 p.m. Eastern, with a 3-hour special featuring former cast members, hosts, and major musical guests. In its normal 11:30 p.m. Eastern slot Saturday, viewers can watch a rerun of the debut episode. Man, all the names from all the years. Incredible. Chevy Chase, Dan Aykroyd, John Belushi, Eddie Murphy, Bill Murray, Adam Sandler, Chris Farley, Amy Poehler, Will Ferrell. Those and many, many more got their start on Saturday Night Live. NVIDIA disclosed its latest equity holdings today, and the reveal led to some wild swings in the fortunes of companies that saw their shares bought or sold by the chip giant. The biggest winner early today were shares of WeRide, a Chinese autonomous driving play that saw its stock nearly double after NVIDIA disclosed a new stake in the company of around 1.8 million shares, worth about $55.7 million at Friday's market price. Retail sales. New data out this morning showed retail sales declined more than expected in the first month of 2025. Headline retail sales fell 0.9% in January, more than the 0.2% decline economists had expected, according to Bloomberg. This marked the largest month-over-month decline in retail sales since January of 2024. Retail sales in December were revised up to 0.7% from a prior reading that showed a 0.4% increase in the month, according to Census Bureau data. They're blaming it on the traditional holiday hangover and a nasty winter freeze, cooling top-line retail sales. And last, Meta. After pushing into augmented reality and artificial intelligence, has identified its next big bet: AI-powered humanoid robots. The company is making a significant investment into the category: futuristic robots that can act like humans and assist with physical tasks, and is forming a new team within its Reality Labs hardware division to conduct the work, according to people with knowledge of the matter. As a result, Meta's up almost 1% today, or $6.18. Make that $6.30. Now, on the local news front, been a slow week for Logic 247. We're in week 341. Over the last 341 weeks, we've issued over 19,800 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, a typical week will be somewhere between 50 and 75 alerts, but it's all based on market structure. And the structure of the market this week, every time you try to go long or find a long opportunity, you got blue and climbing overhead, which is resistance. On a short, you got red and falling directly below price, potential support. It's made it very difficult to find. See, this isn't like trading what's in front of you, because I'm having to look ahead. These alerts come out usually a half hour to a day before they actually trigger. So it's been a challenge, but next week's a new week. So this week, when Valerie did the recap this morning at 6:30 a.m. Eastern, we had a total of 23 alerts. One never triggered. We're still waiting on the outcome of 4. They gave us 18 actionable alerts, of which 1 or 6% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Each logic alert has an entry price, an initial target, quite often additional targets, and a final trade to target. While yes, you can trade them, the real purpose of the logic alerts is to help you learn how to read a chart. Whatever field you go into, let's say you want to be a lawyer, you got to be able to read the law books. You want to be a trader, got to be able to read the charts. And after a little bit of training, you should be able to look at any chart of any market, and with our humble set of indicators, instinctively know what the next high probability move is. And what we've proved over 341 weeks and over 18,900 alerts is that about 20% of the time the market does something other than the next high probability thing. So if you're chasing that 100% holy grail, never get stopped out again thing, save your time, save your treasure. It not only doesn't exist, it can exist. And I've gone through all the reasons in the past, so I'll spare you those now. Long before we had Logic 247, we had the concierge trade alerts. They're a little bit different. Number one, they don't come out around the clock. They're published as a static report each evening, shortly before or shortly after the Globex open. I try to get them out before they open. I did last night. They came out at 5:55 p.m. Eastern. So all members, all trial members, had these targets 5 minutes ahead of the open. The S&P, the Dow, the Russell, crude oil, NQ, gold, and silver. If you're a member or trial member, be sure to read this information up here. Make sure you understand it, and if not, ask. Okay? All right. Let's take a look at the daily chart. This is where we start each day. This is the S&P 500 E-mini futures. We finally, on Thursday, yesterday, broke through that trend line. And you'll notice how red and falling turned to blue and climbing. Now, the high of this candle is 61.4775. This is 61.4675. So we failed to take out this high by 1 point. That's a sign of weakness. Now we could just be getting a little pullback here, but we've got a doji on the day, and so what'll be interesting is to see how we close today, especially with a long weekend ahead. Will the institutional traders, the ones who actually move price, be willing to carry this home over the weekend? It's quite possible we could see a bit of a sell-off into the close, and we can find support potentially at the step line, blue and climbing, or the daily BBC. BBC simply stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now, this little bit of blue right here doesn't look like much, but, and I went over this last night in the workshop. Notice way back here in August of last year, when red and falling turned to blue and climbing. See what happened? Red and falling turned to blue and climbing. Red and falling turned to blue and climbing. Red and falling turned to blue and climbing. And there it goes again. There it goes again, this last big rally that we saw in January. Now we've just been kind of waddling sideways, but there's blue and climbing again. So even if we do sell off into the close today, the fact that we've got blue and climbing on the board, I think next week we shall see higher prices. A reminder, the weekly trading zones normally go out Monday morning at 6:15 a.m. Eastern, but when Monday is a holiday, they come out Tuesday morning at 6:15 a.m. Eastern. Whether you trade futures, stocks, crypto, Forex, ETFs, whatever the case, I encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade, so you can get a big picture look. The institutional traders, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. And because of the size of their accounts and the size they trade in, they're the ones that actually move price. So if you'll spend that 2 minutes before you start trading, just looking at the daily chart of whatever you're going to trade, number one, you can see what the deep pockets are doing, okay? But you're also able to identify, as we did yesterday here on the broadcast and last night in the workshop, that the next major obstacle would be at 61.4775 and then 61.62 1/4. And today's high came 1 point shy of taking out this high. So again, going into next week, I'm bullish for higher prices because of blue and climbing. But I think going into the long weekend, we could see a retracement, possibly all the way back to the BBC. Now, the alerts, the logic alerts and the concierge trade alerts are both done on the 30-minute chart. There's nothing magic about 30 minutes. It's just a time frame I chose many years ago. And they say if it's not broke, don't fix it. So here we are. Now you can see red and falling leads to lower prices. And now we're on a 30-minute chart, but blue and climbing leads to higher prices. Red and falling, lower prices. Blue and climbing, higher prices. These vertical lines separate today Friday from yesterday Thursday. Back here's Wednesday. You can go back and see Tuesday and Monday. When price drops to a weekly zone, we expect support till proven otherwise. When it rallies up to a zone, we expect resistance till proven otherwise. Same thing on this day. We went from zone down to the zone, back up to the zone. And then we had this wild move, news-based, back on Wednesday. Here's Thursday. Yesterday afternoon, we managed to get above the zone we've been trying to get above all week. So we get a leg, we get a retracement. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. So whether you're pulling up from below or pulling down from above, the pullback holds more often than it doesn't. But eventually, it will trade through. So we opened here last night. We had that blue and climbing overhead, but price did manage to make it up to the long target. Then things changed as blue and climbing turned to red and falling. It took us to the BBC and we traded through the BBC. And this low right here, as you can see, this from yesterday, that's market structure. That support sent us back up to the target. And now here we are, heading lower. So if this support right here doesn't hold, then the next area you should watch is right here around 61.10. And then you've got a pretty clean shot at making it all the way to 60.96. I wouldn't be surprised to see that happen today, based on all the things I already discussed. The Dow. Here's where we opened last night. Couldn't get to the long target because, again, blue and climbing overhead, turned to red and falling, took us all the way down to here. Buyers came in, again, at an unusual spot. It would have made more sense to see them come in just a little bit earlier, but they were a little late. So support sends us to resistance. Resistance sends us back to support. And we're pretty close to having a little triple bottom on the day here. Remember, these are 30-minute candles. And as you can see, blue and climbing, it's starting to curl over. Once it turns to red and falling, that should take us down to the short target and probably to the zone below. On the Russell, here's where we opened last night. Again, banged our head on blue and climbing, red and falling, consolidated at the BBC, but finally, early this morning, we got a little boost, took us up to the long target, and this high comes right into this area right here. So people always say, how far left do you have to look? My answer is always the same, as far as you need to. So now with red and falling overhead and being below the BBC, Our next major obstacle below us is the weekly trading zone, and then the target, and I suspect we could find ourselves in this area by the close today. Definitely looks like the markets want to head lower. Now the zones are published Monday morning at 6:15 a.m. Eastern, except Monday holiday, like I said before, so they won't come out until this coming Tuesday at 6:15 a.m. Eastern. But once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. On the NQ, here's where we opened last night. Again, blue and climbing overhead. We did manage to punch up through red and falling to tag the target. And then we took a trip down. Again, buyers come in at, see this little spot here where the step line crossed. Okay, this is the perfect stack. Price, step line, blue and climbing, BBC. Definitely expecting higher prices. But when the step line crosses to the right side of blue and climbing, we typically see a retracement back to the BBC. And that is what happened. Now, you see right here where price got back on the left side of blue and climbing? That would be right about here. That's what you call an important price, important area. That support took us all the way up to the long target. Resistance sent us back to support at the BBC. And now we're just consolidating at the weekly zone. Only three things can happen when price encounters a weekly zone. 70% of the time it's going to be consolidation. 20% of the time rejection. 10% of the time the slice. That's when price slices through a weekly zone on the 30-minute chart like it's not even there. Typically when that happens, as the move runs out of steam, price will retrace back to the zone it sliced through and then continue in the direction of the slice. Now the NQ's got resistance times 2 right overhead. Blue and climbing and the step line are both directly above price. If price can overcome that, then something like 22,150 to 22,160, that would be worth $200 per contract traded. Crude oil. Here's the open. Red and falling overhead. Pushed us down to the BBC support. Set us back up here where we barely took out that high. And anytime we barely take out a previous swing high or swing low, we're suspicious. We want price to prove itself. So we come back to the BBC and the zone, that's support times 2. A pullback to the BBC alone we expect to hold till proven otherwise. Same with the zone. So when you got both of them in the same place, that's support times 2. That support sent us up to the long target. Resistance set us back down to the zone. We spiked it a little bit. Now this low here, if you look left, it's this low right here. Okay, and that took us all the way back up to the long target and through the long target. But we failed to take out that high. Sign of weakness. So down we come. We trade through the BBC, but the pullback holds, and that sends us all the way down to this zone. We get a little consolidation, and then boom, we drop to the short target. Notice how the step line is starting to angle right. Okay, so if we continue to consolidate here, the step line will cross red and falling, and when that happens, we anticipate a retracement back to the BBC. Whenever the step line crosses either red and falling or blue and climbing, we look for a retracement back to the BBC. Step line crossed here, there's a pullback to the BBC. On gold, tough day for gold. Gold had a pretty powerful week. And here we are at the end of the week, selling off pretty hard. This is where we opened, blue and climbing overhead, resistance, back to support at the BBC, and then we get basically a double top when it ends up turning into a triple top. Then we get below the BBC, and there's a bearish cross. That's when the red line gets below the green line. Came all the way down to this zone, bounced, came back to the zone, consolidated. Now price is looking to make its way down to the next zone, which is 28.93/94. And silver. This was the open. We punched through blue and climbing on silver, made it all the way up to the long target, and then on the pullback, see how the top of the target held? I point that out to you guys every day, but it's important to remember. And then we got a big move on silver. Then the step line crossed. Here comes the pullback to the BBC. Blue and climbing turned to red and falling. Took us all the way down to the top of the long target, and we bounced. This was a green candle all the way up to the zone, but we ended up closing here. This candle opens, takes us all the way down to the zone. We spiked it by a couple pennies. It only takes 2 pennies in silver to get your goal for the day. Now notice how the step line's starting to hook to the right. It's directly below red and falling. So if we consolidate here another candle or two, the step line is going to cross red and falling. And then what do we expect? A retracement or an attempt to retrace back to the BBC. Remember, price always reverts to the mean. And in our case, the mean is green. Stands BBC bull bear cross. Bullish above the green line, bearish below it. Pretty simple. And now we got a little bit of red body here. So the bulls just might be done. And it's amazing that we failed to take this out by just 1 point. Last night in the workshop, I talked a lot about this turning to blue and climbing and how we might be on a path to take out the all-time historic high, which was put in on December 6th. And that all-time historic high is 61.7875. But in order to get there, we've got to overcome the high of January 31st. We've got to overcome the high of January 24th. And then we got these highs here, December 16th, December 11th, December 9th, and then the all-time historic high. So there you have it in a nutshell. Okay, Michael should be here any second, so I'll clear the field for him. To become a member, it's very simple. Send an email to support@cfrn.net. In the subject line, just put, I want to become a member. In the body of the email, put your name, put your phone number. We're not going to call you, but we will send you an email that explains everything you get when you become a passport holder. And there's a link you can click to actually become a passport holder. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. They buy courses, books, videos. Nothing wrong with any of those, but they're no substitute for a living, breathing teacher putting on, taking off trades, and answering your questions as you trade along, as you learn the strategy and the methodology. So as a passport holder, you get 2 hours of group training every trading day. On top of that, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. Plus, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published. Monday morning, if it's not a holiday, you get the weekly trading zones at 6:15 a.m. Eastern, and you're able to attend the members only workshop every Thursday night. Everything a trader needs, all under one roof, one low price. Michael, is that you?
That is me.
Okay. Well, we were just waiting on you.
Okay.
So we're ready.
All right. I will take it over here. Now, you were just mentioning on a regular work week. So for anybody that's listening right now, the weekly trading zones and all that, they're not going to come out until Tuesday morning. Okay. They won't come out on Monday morning at 6:15 a.m. You know, if you're overseas somewhere, if you're in some other country and you don't celebrate our President's Day, then the zones are not going to be coming out Monday morning. They'll be coming out Tuesday morning. Okay.
Okay, charts look good.
Good. Here we go. Good afternoon, everyone. Today is Friday, the 14th day of February 2025. Happy Valentine's Day, everyone. Yeah, okay, so if you've not taken a free trial, let's go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on the purple button right there. If you do that, you will then be sent to, actually, this is a new page that I just attached to it last night. It will then be sent, if I click on that, to this page right here. All right, where all that we ask for is your name, your email, and your phone number. And down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your TradingView login ID. All right, we really need the TradingView login ID to give you charts. If you don't give us a TradingView login ID, you're not going to have the charts that we're trading with in the morning. All right, this stuff down here is only on TradingView. So to get TradingView charts, if you don't have it, go here to mytradingiq.com, click on trading platforms. When you do that, you will be sent right here. All right, TradingView platform. Click on this right here. Watch this video. It's 3 minutes long. It's going to suggest you click on this right here. When you click on that, it's going to bring you to this page. Click on monthly, and most of you are going to go for the essential. That's pretty much all you need. It'll give you 2 charts at once. All right. I don't know if they have any deal right now, but do the monthly, because you know, a few times a year they do an annual deal. That's a really big savings. So if you wait for the annual deal to come along, start out with the monthly. It's cheap enough. It's not actually even $14.95 a month in the beginning. I give you a 30-day trial. I'm pretty sure they give you a 30-day trial. You do need to get real-time data though. Okay, if you don't get real-time data, then, well, you don't get real-time data. All right. You're really gonna need real-time data. So yeah, so that's that. Now let's get into the spreadsheet. We had a pretty good day today. Now the week has been just, well, we've been struggling to come back from having to switch to the new DOM and me having to go away for a couple of days and all that.
It's been a
I still managed to
weird
work.
week for all kinds of reasons. Yeah.
It has. It's been, I mean, the whole month of February so far has been mixed up, because from the very beginning of February, where we had to go to the new DOM, we had to go to the new FCM, we had to do all that stuff. It's just been a weird start to February, but we managed to get through it all, and we had a pretty good day today. We're up 128 ticks on the NQ, -8 on crude, +20 on gold, and +26 on the ES. Put us at 1,085 with one contract this morning. Today took 5 minutes in one trade to get to $1,000 a contract, a total of 27 trades. So on the month now, we're up $9,255 with one contract over 8 business days, averaging $1,156 per contract per 2-hour business day. On the year, we're at $41,432. That's with one contract. We're a month and a half in right now. With one contract, we're already at $41,432. So at 28 business days, averaging $1,479 per contract per 2-hour business day. Now over here, the 24/20 stuff, if you were to add one contract a month or add one contract for every $2,000 you gain per contract, right? It's not just $2,000, it's $2,000 per contract. So you start here with one contract and you earn $2,000. You get to go to 2 contracts. Then you earn $4,000 and you get to go to 3 contracts. And then you earn $6,000 and you get to go to 4 contracts. And you earn $8,000, you get to go to 5. And you earn 10, you get to go to 6. Earn 12, you get to go to 7. Earn 14, and so on and so on. And the idea is to do it until you get up to 20 contracts. I have found that 10 contracts is a really nice number. You don't get that much slippage with 10 contracts, and you get plenty of money, plenty of opportunity, plenty of fills, good fills, relatively good fills. So I'm going to go with 10 all year this year. But the 24/20 blueprint, we did do that from beginning to end. And you get to watch that experience. Anyway, the trades that we took, let's get into them. All right, we'll start out here on gold. Today in gold, I lost my sheet. Was this today in gold? This today in gold? That's yesterday in gold. This is today in gold. Here it is. All right, today in gold, we had quite a few trades in gold actually. And at the end of the session, we had a gold trade that I think I made a little money on right at the very end. Where was it? It was right here. It was a short right in here at the end of the session. I made some money on that one. I didn't count that toward the total though. Okay, so in the gold, let's go all the way back here to the beginning. Here we are. Our first trade on gold right here, we picked up 12 ticks. Right, then the next trade we stopped out, put us at -3. Then we got a +5 there to get us to 2. Then we stopped out again. That put us at -13. We had a break even and a stop out again, got us to -28. So I was not feeling really great about it right there, but they were valid trades and they were just real stop outs. It happens. But then we turned it right around, went from -28. Right here we went to -12, so we picked up 16 ticks on that one. And then right here we went from -12 to +8, so we picked up 20 ticks on that to get us to +8. And then we picked up 10 ticks here to get us to +18. And I believe that's where we got a little bit more. +18, we picked up 2 more to get us to 20, and then we had a break even right there. That is where we ended it. So the gold was back and forth quite a bit today. Quite a bit of back and forth on the gold. I don't see any questions in here. Okay, I'll just keep going. Quite a bit of back and forth on the gold. During the break, there was a short trade right in here. I took this one. I made a little money on it right at the end. There was another short trade right here that worked out. A long trade right here, there, that worked out. A long trade here that would have been a break even. A short trade right in here that went enough to get the stop to break even before it turned up. A short trade right in here. That would have worked out just fine. A long trade right in here. That would have stopped you out to the tick. A long trade right here. You could have gotten it all back. A short trade right here on that bar. Could have gotten it all back and then some. And right in here, where the blue led into the overbought, you could have had a short trade on this bar right here. You'd have been selling the open of that bar. That might have stopped you out to the tick. This one right here. It only went down to here. Your stop would have been up here somewhere, and down here would have been the stop to break even. It probably would have been a break even trade. It's got a long trade going right now. I can find my DOM. I don't know. I got to check and see. Has it gone 5 ticks into profit yet? 9.9 up to 1.2. It hasn't, but I just kind of messed it up by looking for that. If I could get an entry right here at 0.8, I can right there. Yeah, look at that. I can. All right. I was going to say, if I could get an entry here before it moves up here 5 ticks away, then I can take it. And it just did give me that entry, and I just did take it, but I took it down here at 0.7 right here. 0.7. So that's gold trade right there. We'll see how that does. It is with the trend. It's an aggressive trade with the trend. Okay. What's the difference? A conservative trade with the trend is when it comes out of the oversold. An aggressive trade with the trend is when it goes into the oversold. With the trend means it's above the YBR, going long above the YBR. Okay. So that trade is on, and we'll manage it as it moves on here, as I move on. This is the crude oil. We didn't have much going on crude. We had one trade there. We picked up 7 ticks, and one trade there we stopped out on. So altogether we're -8. There was a trade at the end that I took right in here that I made some money on. I think I made 6 ticks on that. But we ended up with -8 overall on crude during the session. All right, there hasn't been much more going on with crude. There was one more short right here on this bar that worked out to be a profitable trade. It's in some pretty good chop right here. And in the chop is when the divergence trades work the best. Right? When you start to trend like this, then you want to consider taking the trend trades. Okay, and by trend, I mean, if you're below the YBR, you're only taking short trades. If you're above the YBR, you're only taking long trades. Okay. All right. Now, yes, we stopped out on that gold trade. On the ES, let's go back to the beginning of the ES. Well, not a whole bunch going on here on the ES, I guess. On the ES, we just have these 3 trades. We had the first trade, we had a +8. That's where we got our goal for the day on the very first trade. And then we had a +12 that got us to 20. And then we had a +6 that got us to 26. And that was it on ES for us this morning. Okay. Going through the rest here, we had those in the open of that bar right there would have been your long trade. That would have worked out. On the close, I'm sorry, the open of this bar here. No, the open of this bar right here would have been a short trade. That would have worked out. If you didn't get a lot of slippage, that would have worked out. It didn't go 10 ticks away. On the open of bar right here would have been a short trade. That would have come back to break even and then stopped you out eventually. On the open of this bar, would have a trade that would have just stopped you out. This right here would have been profitable. This would have been a stop out. This would have been profitable. And that's it for the ES. So there were a few stop outs in here during the break. Now that is just doing the aggressive trades. If you're doing the trades with the trend, the aggressive trades with the trend, you gotta get rid of the slingshot, okay? If you're just looking at this, you're looking at shorts below the YBR, shorts below the YBR, longs above the YBR. Okay, so the aggressive one, you're gonna be selling when it goes into the overbought. So be selling there, that was profitable. You'd be selling there, that was profitable. Be selling there, that was profitable. So doing the aggressive trades with the trend, everyone worked out. Doing the conservative trades with the trend, you'd be selling when it comes out of the overbought, not when it goes into it. Okay. So conservative trades with the trend, you'd be selling the down close of this bar right here. That would have just about worked out. It might have stopped out to the tick right there. It depends how far down you sold it. That was conservative. The conservative over here would have been selling the down close of this bar. So it would have been right about here. The open of this bar is what you'd be looking at, right? Right in there, that would have worked out to some profit, maybe a break even, and you've been selling the down close of that bar. Again, the conservative trade wouldn't have worked out right here. That would have stopped you out, right? So in this particular instance, just looking at this little piece of time right here, the aggressive trades with the trend were the best ones, right in that case right there. So it depends what you want to do. When you're in chop, the divergence trades work best. When you're trending, it depends how strong of a trend you have. If you don't have a trend where you have long legs, then the aggressive trade is going to be better. When you're in a trend that does not have long legs within it, if you have the short legs, that is one of the things I said last night in the partners meeting, and I said again this morning. If you can do the conservative trade with the trend, you have to make sure that from your entry of the trade to the prior swing low, this little piece right here is greater than what your stop is. Right, so you have 10 ticks from here to here, at least minimum of 10 ticks from there to there, and you don't. So that is not a trade you would want to take. Right, I said that in the partners meeting last night, and I said it this morning. I shall take that to heart if you're going to be doing those trades. Now, the NQ today on the NQ, we had a bunch of NQ trades. We actually traded more in the NQ than anything else. Okay, and we had a pretty good day on the NQ. Now, it wasn't a 400 tick day, but it was still a pretty good day. We did have some full wins. We're on the 31 range, so the full win on today is 48 ticks. But our first trade here was a +4. Then we had a +48 there to get us to 52. And then we had a break even and a 20 to get us to 72, then a 4 to get us to 76, then a something to get us to 92. I guess that's 16 to get us to 92. And I thought I had two 16s in a row. Went from 92 to 96, and from 96 to 112. So there were two 16s in there. And then from 112, we went up to 128. This was the other 16 right here. And then from 112, we went up to 128. Okay, so I guess that was a 16 there too. So there are 3 16 trades. Had a couple of break evens in there. Now during the break, you can see there during the break, we had, where's the break start? Right here. All right, the first trade that was here, the divergence trade was right here, and that is also an aggressive trend trade and a conservative trend trade right there. The divergence trade would have been right here, the aggressive trend trade would have been right here, and the conservative trade would have been right here, right? All 3 of those types of trades worked out well. Now right here, you're above the YBR, so the aggressive trend trade and the divergence trade would have both been the open of this bar right here. Both of those would have stopped out. And if you did the conservative trade, all the trades would have stopped out on that one. All trade types would have stopped out on that one. All right, so this one right here, the aggressive and the divergence trade is the only thing you would have had here. And that's, well, it's the NQ you would have had. It's the NQ 31 range. You would have had a 48 tick stop. Your stop would have been, if you got your entry right here at 29, 48 ticks is what, 9 points, right? No, it's 12 points, 12 points. So the stop would have been up at 41. Stop would have been right here at 41. So right there, if you didn't get your stop to break even right in here, you would have stopped out right there. Anyway, there was another one right here. That was aggressive trend. Aggressive trend and divergence. Both the aggressive trend and the divergence worked out, but if you waited for the conservative trade, again, you look at the prior swing low and look what you're going to risk compared to what you got for reward. That would have eventually worked out, I think. It would have eventually worked out way over here, but it would have been ugly. The next trade, counter trend or divergence, would have been buying the open of this bar right here. It's 31 ticks. That would have gotten you break even or some profit. That's a counter trend divergence trade. It was not with the trend at all. Okay, and that's how it worked out today. We're up 128 on the NQ today, so it was a good day trading. We had 30-something trades, I think, right? Oh, I thought we had 30-something. We only had 27 trades. I thought we had more than that. 5, 10, 15, 20, nope, only 27 trades. All right, well, that was our morning. 36 stop, not 48. Did I say it backwards? I said it backwards. Right, David? Okay, so you would have stopped out on that one. Sorry, I did it backwards. A 9 by 12. I did it backwards. I did 12 by 9. Thank you for showing me that other people are listening. So you would have stopped out on that for sure. I said you probably would have stopped out is what I said. You definitely would have stopped out. But yes. All right. So over here right now, there was just a long trade right here on the gold from the open of that bar right there. That was an aggressive trend trade, a divergence trade. And right here at the close of that bar would have been a conservative trend trade. So you did the aggressive trade, profit right there. You got your goal for the day on that single trade. If you want to be more conservative, then you just about got your stop to break even right now. Okay. So you guys following all this stuff? What I'm telling you on this? Is it all making sense to you? You know, the crude oil is hardly moving at all. You know, after noon, it seems like it just crawls around in there. You go to a much smaller time frame. Does it give us anything in a smaller time frame? Not much more. guess it does give us something more. Maybe we can try that tomorrow. Go to a 4 range on the crude. We'll see. See how it works out. Can I comment on that spot on the ES just before 1140? You saw that live and debated if it would be a good trade, and you did the conservative after it came out of the overbought. You're unclear on the flat spots, and should those be ignored? The flat spots, depends what trade you're doing, Kevin. If you're doing the conservative trade, then the flat spots don't affect you at all because you're doing it after the flat spot. But you're saying 1140. Hang on, let's go right here. 1140, and you said that spot on the ES just before 1140. You saw that live and debated if it would be a good trade after you did the conservative after it came out. Okay, so you did the conservative right here after it came out right here. Okay, so with the conservative, you're getting rid of the slingshot, right? You're only looking at the blue line down. And Dan, I'll go slower for you in a minute. Okay. With the conservative trade, you're below the YBR, so you're only looking at shorts, and you're looking for it to come out of the overbought. So you wait for the down close. So that was a good trade right there, yeah. Kevin, that was a good trade right there. All right, good conservative trade. Okay, and this one over here, good conservative trade. And this one right here, conservative trade. Now that one wasn't as good. You don't have as much room down to the swing low, but it still wasn't as good, and that wouldn't have worked out at all. This one would have, this one over here would not have. Okay, and then it changed directions and you didn't get any kind of a trade right here, and then changed directions again. You had a conservative trade right there again. Looking at the swing low, you probably want to skip that one and take this one, where it's got a little more room down to the swing low right here. Okay. This one didn't have any room to the swing low, so you probably want to skip that one. Okay, like right now, if we got down here, we need a down close and we need to get away from the swing high. Okay. All right. So Dan, I said all this. Oh, you don't get to go to the partners meetings, right? But all you're looking for in this case, you are looking for, well, down here we'll say, looking for divergence between the blue line and the black line. And regardless of what you have up here on price, looking for divergence between the blue line and the black line. All right, when the blue line goes into the overbought or oversold by itself, that's what this cover is for down here. This cover right here. The reason that's there is so you can see when the blue line pops out of it by itself like that. When that happens, you sell the open of the next bar. When it goes into the overbought like that by itself, you sell the open of the next bar. When it goes like this by itself, you buy the open of the next bar. All right. When it does this, this is still buying the open of the next bar. All right. In that case right there, you would have bought the open of this bar right here, and that would have stopped you out. In this case right here, you would have sold the open of this bar, and that would have kept you in the trade just barely. In this case right here, you would have bought the open of that bar, and that would have stopped you out. Okay. Now this is just doing it without considering trend or anything like that. That's just doing the divergences, right? The blue line is by itself right here. You sell the open of the next bar. So right there would have been a trade. Right here, you would have sold the open of this bar. Okay. Right here, you would have bought the open of this bar, bought the open of that bar, and that would have worked out. Right here, you would have sold the open of this bar, and that would have stopped out. Right here, you would have bought the open of this bar, and that would have been a break. It wasn't even that bar, it was the bar after this one right here, and that would have been a break even right there before ticks in profit. Okay, that's all you're looking to do if you're just going to trade the divergence trades. Okay, Dan. Now, you may be looking at other things too. Like in here, we're using the YBR because that's what we use with TIQ. Right? But you might have been looking at this with the background color. Right? And then you trade in the direction of the background color when it goes into or out of the overbought. And you don't have the ultimate slingshot to work with either. So those are different things that you're looking at there. Okay. This is Trading IQ, my Trading IQ. And in my Trading IQ, we use the YBR to determine the trend. Okay. So that's it. And with my Trading IQ, you get the room in the morning too, to get in there and watch me do it and listen to me do it and see me do it, all that stuff. All right. If you haven't taken a trial there, go here to mytradingiq.com page, mytradingiq.com, click on the purple button right there. There's no credit card required for the trial. Click on the purple button. And once you do that, you'll be sent to this registration page. Just fill this all out right down here. Make sure you give us a TradingView login ID, and we'll enable all the indicators for you for Trading IQ. All right. Now, Trading IQ is a little bit different set of indicators. One, you get the context. This is all the stuff that's in the context. We're only using one little thing within the context. But there's a bunch of things that you can turn on within the context, but you don't need to right now. Okay. And there's the ultimate slingshot, which is the black line down here. Okay. Oh, you did this morning? Okay, I didn't see that go through.
There was a question in YouTube from Mr. Clean. What is the daily goal? And so
daily goal.
I shared with him $100 per contract traded, but you can elaborate.
Yes. All right, and that's the 24/20 blueprint, right? The 24/20 blueprint is to achieve the daily goal and stop trading when you get the goal. Now, the daily goal that we have, $100 isn't a huge daily goal, but it's a goal that we can achieve almost every single day. And you really need that. You need to have a goal that you can get every day. And, $100, even $500 a week, if you get the goal every day for the week, that's still not, it's not a ton of money, all right? But over time, it does add up. Last year we started with one contract at the beginning of the year. If you started with one contract, I started with 13 last year. But if you started with one contract at the beginning of the year and you added one contract per month doing what I did during the whole year, you would have ended up with $240,000 at the end of the year. And that is quitting trading when you hit that goal, all right? We would have ended up trading 12 contracts at the end of December, 12 contracts. And, just quitting when you get the goal at the end of December, I made $39,430 with 12 contracts on. And that was 289 minutes, whatever that works out to in hours is what it was. Okay, it was less than 5 hours trading in December for just about $40,000 with 12 contracts on. So that's what the goal is all about, and the idea is to quit when you get the goal. Right? So these numbers right in here, the number of minutes it took me to get the goal and the number of trades it took me to get to the goal. These numbers right here are with 10 contracts on. So that is what I was at when I got 10 contracts. This morning, I actually had a target at the goal, and it got me my 8 ticks at the goal. But yesterday, I let it run over a little bit, and let it run over a little bit. And I must have had a target right there at the goal on that day. Okay, that's the whole idea behind it. Okay, that is the whole idea behind it. All right, so what was I showing you? I was answering your question, Kevin. I think I answered your question. And I was showing you, Dan. So what you can do, Dan, if you want, if you took the trial this morning, go here to mytradingiq.com, click on Trade Rules, okay, and then come down here. And do you have Essential or do you have the Plus version of TradingView? Plus, okay, then click on this one right here. Oh, I'm sorry, not mean that one. Yeah, this one right here. This one was 6JUC6NAIR. That is a copy of this. If I save this right now, see that? That is that right there. So I can post that in here too if you want. And you can just go straight to that. All right, that's going to give you a read-only copy. It'll give you a read-only copy of mine. All right, so in the upper right-hand corner, you click the word copy, and it'll prompt you to save it. And it'll save everything just like I have it right here. you won't get this stuff because nobody's got access to that yet. So let me just take that off and that off, and I'll save it again right now. Okay. So now you get everything that you have right here, right now. Okay. Wow, it's 126 already. Huh.
Then you have to rename it so that you can,
Yeah.
because it's a read-only version when you click that link.
You'll have the word copy up there, and then it'll prompt you to rename it. You can rename it whatever you want. I have it named this, but that's not even what I'm showing right now. I'm showing gold and crude in the S and the NQ. So you can rename it whatever you want when it pops that box up for you. If you have the plus version, then you shouldn't run into the issue of having too many layouts. But if you have the essential version, you only get 5 layouts, so you might run into a problem with that. Okay. But you don't have the essential, so you should be good there. All right. All right. Well, it is now 127. I haven't taken a single trade in here, have I? I took one trade. I took that gold trade that stopped out. That's all I've done. There was another trade right here on the crude. Did I take that? I didn't take that. Nothing here, nothing here. And that one gold trade that I took stopped. There was another one that worked out right here. But that first one that I took was a long trade, a short trade. It's a short trade right here, I think. That stopped me out. And then there was a long trade right after that worked out really well, and another long trade right there that worked out. So the gold has been pretty good the last couple of days. I'm knocking on wood. The gold has been pretty good the last couple of days. It usually is pretty good, but it's given us a lot of opportunity, is what I mean, the last couple of days. It was back and forth quite a bit today, but yesterday, we're up 20 today, but yesterday we're up 45, and the day before that we're up 41, and the day before that we're up 54, and the day before that we're up 52. All on gold, and that's with one contract. So there's one right here on gold right now. It's a short. And did I fill? I just filled. Here it is. Okay, that'll probably be my last trade this morning or this afternoon. In the room anyway. Now, what should this do, right? What should it do? It's an aggressive trade with the trend. We're below the YBR. I shorted. We're below the YBR. You only want to look at short trades. And here it is. It's starting to move with it right now. Put the window on top. And what should it do? Well, at the very minimum, it should get down here to the prior swing low, right? So 8.99. It should get down to right here at the very minimum. All right. And beyond that, well, we have to see how far back it pulls right now. But beyond that, it should probably get down below 8.99. I would say probably down here to 96.6, 96.5 is what I would say. Yeah, roughly. What I'm looking at when I'm doing that, when I'm making that assessment, that estimate, what I'm looking at, oh man, what the heck just happened there? I don't know. What I'm looking at is this, right? The distance from here to here. And you take that distance from here to here and double it. So right there it was 96.6 exactly. I eyeballed that. It came out pretty much exactly where I thought it would. And that's what I'm looking at. Right. So if it goes down to here and goes through there, it should double that distance right here. From here to here, it should double that distance. That's what you'd expect out of the trade. Okay. Now it's got to go down there first. See if it pulls back deeper like this, then this gets bigger. See, just a little bit bigger right now. One more tick bigger. And if it ends up stopping me out, well, then this doesn't matter at all. It will actually matter. The way it'll come back is on the other side. If it ends up stopping me out here, then everything's going to work out the other direction, go around the other side. But you see now it's going down, so I'm going to bump my stop to break even on this. And now right here at the swing low, 8.99, it should bounce off of that. All right, so I'm going to lock in some profit right here. This is actually right there is 600 bucks right there locked. And so I'm out with 600 bucks. When it gets down to the swing low, I usually expect it to find support there and bounce back. So I usually trail my stop pretty close when it gets down there. Now, if it goes through the swing low, it'll probably pull back before it does this leg. Okay. If it goes through the swing low, it'll probably pull back before it goes through there and does this leg. But now this leg is going down to like 86.4 or something like that. 86.5. It's only up by one tick. But you see, the markets are always doing the same thing. And so you can kind of anticipate what they should do next. You get to a trade. All right, well, I have run over. It's now 1:31. If you haven't taken a free trial with us, go here to mytradingiq.com, the homepage at mytradingiq.com. The purple button right here, there's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out the page and be sent everything you need to get into the room. Monday, we're not going to have the room. Right? It starts on Tuesday next week. It says it right here, Tuesday. Okay. That is it, guys. If anybody has any questions, you can email me, support@cfrn.net, support@mytradingiq.com. You probably all get my phone number and all that in there too, so you can text me at that number. Okay. And that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Plane is ready.
Yep. Okay, recap of the morning session.
Today took 5 minutes and 1 trade to get to $1,000. 10 contracts on.
Good job.
Thank you. Thank you very much.
Okay, guys, we've covered all the different markets. We'll take one last peek here at the daily chart of the S&P. Remember, we talked last night in the workshop how this had turned to blue and climbing. Now we went all the way back to August. Blue and climbing, higher prices, red and falling, lower prices. Blue and climbing, higher prices, red and falling, lower prices. So I think we're going to sell off into the close today. Maybe drop back to the top of this trend line and the step line. But then when the markets are going to open Sunday night. U.S. markets are closed because of President's Day, but the Globex market will open Sunday night. And so holiday trade's always a little bit tricky, but the fact that we failed to take out this high, which we talked about last night and yesterday, 61.47.75, today's high 61.46.75. See, each of these obstacles have to be overcome before we can even think about taking out the all-time historic high put in on December 6th. So we'll probably get a retracement the end of today, probably show a red candle, maybe not. Again, it depends on how comfortable the institutional traders are on taking their positions home over a long weekend. So if we do sell off today, then that really sets the stage for a nice move up Sunday night. Although you won't have a lot of U.S. participants, they'll be on vacation. About 12:30 on Monday, the Globex session will close. And then Monday night at 6 p.m. Eastern, the markets will reopen. And then Tuesday will be a full day. Again, to become a member, send an email to support@cfrn.net. The subject line, put "I want to become a member." We'll send you an email that explains everything you get as a passport holder. 2 hours of live training every day, the Logic 247 alerts, the indicators, the strategy, concierge trade alerts, weekly trading zones, everything a trader needs, all under one roof, one low price. Just send us an email. All right, we're going to wrap this week up right now with our good word for the day. The peace of God will guard your hearts and minds. Philippians 4:7. So what we're talking about here is give your worries to God. Dan, does that include Michael's stuff? Yes. Yes, it's all the same thing. That's what the 2 hours of live training is about every day. The indicators, the strategy. Yeah, you get it. As a passport holder, you get everything. Okay? All right. So, back to where we were. When you feel anxious and afraid, here's 2 things you should do. Number 1, find a faith friend. When anxiety grabs your mind, one of the most powerful ways to break the worry spiral is to disclose it to a faith friend. When Israel went out to occupy the promised land, here's what God said to them. It's in Deuteronomy 12:20, verse 8. Is anyone afraid or faint-hearted? Let him go home, so that his fellow soldiers will not become disheartened too. Pessimism, fright, and discouragement are contagious, but so is courage. Number 2, take action and face your fear. Sermons about how God will take care of you aren't in and of themselves sufficient to remove anxiety from your life. You must do certain things like stepping out in trust. The way to get God's peace from your heart or from your head to the rest of your body is to trust Him to the point where you can confront your fears head on. So with that in mind, meditate on passages like Psalm 23. Imagine yourself being shepherded by the Lord through the green pastures, being led beside the still waters. Talk to your faith friend before worry gets a foothold in your mind. Use a breath prayer, such as, God, I'm casting all my cares on you. Exercise. Physical exercise is one of the best ways to stop excess adrenaline from building up. Identify your fear and take even one small step towards confronting it. And last, get sufficient rest. David said in Psalm 4, verse 8, in peace I will lie down and sleep, for you alone, Lord, make me dwell in safety. So today, give your worries to God. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.